What's going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some expectations for this upcoming week, what might cause some volatility in the stock price, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So this upcoming week is going to be huge for Opendoor, only because one massive catalyst generally for Opendoor is rate cuts and potential rate cuts. And right now, the current likelihood for a cut for the October 29th meeting is 87.7%, and that's for a 25 basis point cut. So at the end of the day, this is going to change dramatically this week. Either the market will be starting to price in a 50 basis point cut or just solidify a 100. And in general, the reason why is because of labor data. So Powell recently spoke, caused some volatility in the broader market. That's a nice way of putting it. But he did really signal that he's still worried about labor. And this upcoming week, we have a lot of big data points. So starting off on Monday, a lot of Fed speakers. And to be fully honest, there's a lot of things that they can bring up. So potential shutdown, tariffs that was recently announced, inflation. There's just a lot of things that they could bring up. So there could be some volatility as a byproduct of that. Tuesday, we do have JOLT numbers. So very big labor data point, consumer confidence. So those two are going to be first thing on Tuesday. On Wednesday, we have ISM manufacturing, ADP employment. So two big data points. Manufacturing, current forecast is 49. Anything above 50 shows more of an expansion. Anything below 50 shows more of a contraction. So there's those two data points. On a side note as well, we will be seeing a lot of volume on the Tuesday because that's the last day in Q3. So you will be seeing some rebalancing from institutions, and lately we've seen a lot of interest and abnormal volume. So it is fair to assume that institutions have and might buy more Opendoor. So again, something to keep in mind. Aside from that, on Thursday, we do have the initial jobless claims, challenger job cuts. So both of those are before the market does open. And then Friday, non-farm payroll and unemployment. So massive amount of labor data points that, like I said, if potentially not horrifically bad, but just bad enough to justify rate cuts, you could see now the market start to look at 50 basis points being on the table. So again, if that does happen, that would be huge for Opendoor. Companies unveiling the earnings, there's nothing really crazy that's going to really move Opendoor. So it is going to be largely its technicals and the data points. Aside from that, and more specific to Opendoor, Kaz alluded to a new product launch. So he said on September the 22nd, just reviewed a product we will launch next week or so. Super excited. And I believe he actually kind of alluded to something like that earlier as well. But he did post something on the 24th. So it looks like they're moving towards AI. I don't know if this is kind of the protocols that he mentions in this post right here, if that is the new launch or if there's something else. And so Kaz, based on as well another email that we saw that he sent to his employees, all employees, it looks as though that he's really focusing on AI. So again, that's kind of a good thing, should increase productivity across the board and maybe help operationally. But nonetheless, I don't know if this is going to be that new launch or if there's going to be something else. So if so, that could be a potential good catalyst as well. Aside from that, 19.36% at the free floats being shorted. So that's what we're going into this upcoming week with. 137.28 million shares overall being shorted. Even on Friday though, shorts did increase 1.59 million shares. So they did kind of help Opendoor close a little bit red. So on Friday, we did close at 881. So quickly going to the options, that does mean that the 850 and below strike prices are considered in the money. So we do have 96,000 at the 850, 22,000 at the 8, 15,750, 8,000 at that 7, and so forth and so forth. And so in reality, you could see a little bit of a bump up going into next week as market makers will have to cover the 850 and below strike prices. It is fair to assume that they've already covered most likely the 750 and below, I would assume, but we haven't really seen any crazy transactions after hours on Friday on either the secondary market or the dark pool. A couple of big ones right here, so 1.7 million, 7 million, but not enough to kind of cover all of that. Looking forward into this upcoming week, you have 12,000 at the 8, 39,000 at the 850, 26,000 at the 9, 13,950, and then 37 at the 10, and then again blah blah blah, so forth and so forth. So best case scenario, Opendoor does close above, let's say 1050. That could cause a nice little bit of a domino effect going into the following week. But from a bull standpoint, you see a consensus for it to be kind of around that 10 to 1050. Bears are anticipating for it to be sub 750 to 8. So you kind of have a little bit of a back and forth where we did close. So we'll just have to wait and see. I think in reality, it's all going to come down to the data points. So a lot of the labor data that I mentioned and how the market's going to truly digest and analyze all that. Aside from all that though, with 881, it is smack dab in the middle between this S1 and this S2. So 843 is going to be a strong support. 893 is going to be the next strong target / resistance, followed by 973. No new analyst ratings or real like any articles kind of talking about Opendoor. So it's just been at the mercy of the broader market, at least lately. And one thing as well, just to keep in mind, there's about 6.5 million shares available to be shorted. So again, if you see that kind of drop, you could be seeing some buying as big money will buy just to lend out. So aside from all that fun stuff though, quickly popping over here. So on the actual chart, things are looking okay. The last couple of days, it did fight for it to get back above that 10-day moving average. Unfortunately, Friday, it kind of fell short a little bit. So that does mean that there's a little bit of a slowing for the momentum. Market position though, this is where you see a lot of willing sellers. So if Opendoor does really hit hard and goes and kind of appreciates first thing, you could see a dent in that, but this is definitely quite significant. Flip side, it is a little bit weak up until about that 673 for the most part. So I think Opendoor does really need to put out some news or something, or again, let's say if there's some good data points, which would prompt some buying, then this might potentially fill in. But based on this, it does look like there's a little bit more potential for some consolidation first thing. But as I've already mentioned, I do believe it's going to simply come down to the data points. And you never know. Given the circumstances and that most recent purchase, that was about 44 million. I think it was on Tuesday or Wednesday or whenever it was last week. You could still see some analysts paying attention to it. So last rating did come out on the 22nd. It was a $1 sell KBW. So again, if institutions see a massive purchase that just happened and potentially more that might be coming, you could see some ratings just based on that alone. But again, it's going to come down to the data points and what CAS puts out for news, whether it be tweets or official PR or something like that. As far as news, there hasn't really been all that much coming out from the company itself. And looking at the general flow, algos were kind of the big attributing factor on Friday. Not so much the whole week, but Friday, I think it was just being artificially suppressed. So I think at the end of the day, Opendoor is going to do okay for the most part, but it, like I said, will come down to whether the company puts out news. So in my opinion, I do feel, given the circumstances, it's going to be extremely volatile, most likely touching this S3 at some point this week, as well as flip side, touching this pivot point. So it's going to be a lot of volatility. So if you haven't researched options, definitely do so, because you can make some pretty good money on like swings, or whether you just day trade or whatever else. But in my opinion, I do feel we will be closing slightly green, so between this pivot and this S1 by the end of the week. And that is only because the market will start to either solidify and price in a 25 basis point cut at least, or start to assume a 50 basis point potentially could be coming. So let me know your thoughts on Opendoor in the comments below. One thing that I have been really monitoring is money market activity. So based on last week, you did have this. So there was about $31.15 billion that left both crypto and equity to go back into money markets. So you're not really seeing that big rotation start to occur. So there is still a certain level of fear in the broader market. And this is why money markets are sitting at $7.31 trillion. So potentially if the market starts to price in, let's say a 50 or 25 basis point cut, then you could see more of a rotation back into, for instance, equities. So again, that could cause a nice bigger rotation, pushing everything higher. So again, that could be coming maybe this week or potentially the following week. So let me know your thoughts on that. Don't forget to hit that thumbs up and subscribe. Hopefully everyone's having an amazing weekend. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto, many of which have been absolutely on point. So I put out daily day trades, numerous swing trades. Pop over there and take a look if you are interested. With all that said, appreciate all of you watching.